All right, good morning, everybody. Hey, it's Thursday, May 24th, 2018. This is your daily Forex trading strategy session. Hang on a second. Let me get the chat room open. That always happens second for some reason. Hang on, let me get this for you. Okay, I'm almost done. So I think that's the chat room. One second. Good morning. Gather around. All right. And 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Almost done. All right. So let's get going. Let's get that chat. All right. Yes, I see the chat. Good. Good morning. Hello, my name is Wayne McDonald. Nice to meet you. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste. We appreciate you. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I do these sessions at Forex.Today, Monday through Friday. me. So please visit Forex.Today. I sometimes do the webinars as I'm doing today on the Forex.Today YouTube website. Sometimes I do it on the on the Forex.Today YouTube channel or the Forex.Today website. Either way, please get involved, ask questions. Give it a like, subscribe. Now, the value of subscribing on the YouTube channel is when I do these impromptu live streams and you're subscribed, it gives you a little thumbs up. And it also says, hey man, the webinar started, so click here and jump in. So it's the fastest, probably by far the fastest way to get in these webinars. All right, so let's go through the world of Forex. All right. So here's what I wanted. All right. Good. All right. So we had some GDP numbers out of Europe, some German news. Meh. Right? Meh. So fine. Right? Germany is doing all right, not amazing, not amazing, but they're hanging in there. Year over year, 2.3 is fairly fine, fairly good, better than the rest of Europe, right? Okay. Zeta. Speeches. We know this is a warm up for later. Going into retail sales, hey, some high numbers. Was that the good kind of numbers or the bad kind of numbers? I'm kind of thinking that that's not the good inflation. So we knew this week was all about trading the pound, so I hope you've been trading the pound. We talked about that on Monday, that even though nothing pound related was happening on Monday, we knew Tuesday, Wednesday, Thursday, all that kind of stuff is going to be great for volatility in the Great British Pound. I don't know if you hung on to that advice or not. Okay, definitely kicking in. Okay, Euro is going to start moving. Yes, FX forecast I sent out an email to subscribers, so you should also be informed that way. All the reason to subscribe to the Forex.Today YouTube channel. So when I do this, See, when I start the live stream, I get my phone goes bing within like 2 seconds of me starting. So anyways, yeah. So that's going to consume today. Weekly jobless claims, all that kind of stuff is just your normal weekly thing. A housing price index, existing home sales. Well, the concern right now, because remember, I always say, don't worry about it. This is all on trend. What's the big deal? Well, you know what's interesting is where the trend is changing right now in the United States in the housing sector. So we need to kind of keep an eye on that and to see if it's just a glitch in the matrix or if it's a real significant change in the market. Okay. I think so the existing home sales should be a big number. Okay, should be a big number, but it may not be, and that's the risk. So, here's the thing. Typically, I say don't worry about it. We know what the trend is. The trend is strong. I don't think, I don't expect any surprises. Any surprise would be quite surprising. Now I do expect a surprise, and it would be probably a bad number. And, so let's see how that affects the markets. Okay, that's at, what is that, at 10? Carney speaks this afternoon. Another reason to be trading the British pound. But again, I'd rather you have been in a trade on Monday, jammed your stop, and just hope you catch the wave. Okay. And Japanese CPI today in Asia. All right. So hopefully, can you guys see the charts okay? I hope so. Wayne, do you manage the week trades with monthly trades? Yeah, I mean, they're all separate, but they're all related. Okay. Oh, well, how do I? Well, you make decisions, right? So if I sold a monthly trade, so put it this way, like the monthly trade on euro dollar was to ride off the moving averages on the 1st of May. So, right? So here's the 1st of May. So as of this vertical line, our job was to sell off the 21 and stay short. The target's here. We're through it. Okay, so you should have taken your profit here. You could have reshorted here, not necessarily, but you could have. Then you have the breakout idea, all right? Right? Do you guys remember talking about it in here? You having to make the choice. Do you stay short? The moo trade, remember? What is it, 2-3 days ago? The moo trade, stay short. Do you keep shorting? If so, where are your lines? Where are your moving averages? Where's the roll reversal? And right? So all of this is monthly. Okay, folding this into a weekly trade plan. This gray area, which is the X, I also explained earlier in the week that that's the sell zone for the week. So the trade plan for the week is already highlighted. I mean, it's what you're looking at. Sell, lower low, lower high, sell, right? Well, that's what this is in here. So I don't have a drawing tool when I do these. Okay. Down in here, you have to make a choice. Okay. Buying is a little dangerous. Well, every day at this time. Buying down here is a bit dangerous, but can be done if you're a bull, but you're buying lower lows. So it's better just to have taken your profit, wait for a significant high, and then catch a higher low, higher high. Okay? So with that kind of mentality, Eternal Soul, isn't it just better to stay out? Because you know it's going to take a day or two to produce that type of price action. What's most important, okay, remember what you see down here is not that important. What you see down here is what you're supposed to do, okay? Your job as a currency trader is to be picking up these pips, okay? And it's 140 pips. No, is it 300? Yeah. All right, so there's your 300 pip move, okay? That's your job. You're supposed to catch every single one of those pips, okay? Your secondary job is maybe to do it again if you're a bear, okay? And that's 250. You know, your job now down here isn't necessarily to keep selling. Now, you can make these decisions, but they're unusual decisions. This is your bread and butter, and this is sort of like, well, this could drop into your weekly. So the question goes back, your weekly and your monthly, right? Your monthly tells you to get out here. Your weekly tells you to get out here. So maybe you're just done. Okay. Justin, no, I decide bull or bear based on fundamentals of central banking policy. So it's not just of a pair. I can't be like bullish euro. They're correlated. So I'm making decisions on euro and I'm making decisions on dollar. If I'm bullish on both, then I don't want to trade this. Okay. So anyways, let's go back to this other thing. So after the fact, guys, once your bread and butter job is done, okay, when you're in this situation, you make the decision. As a bull, do you want to keep buying when it's making lower lows and lower highs in a falling market through the monthly pivots? Are those the market conditions that you're looking for as a bull? You're like, now that we've blown through the monthly pivots, I want to buy. Probably not. Now, as a bear, you have to decide, well, what do I do now? Well, I've hit the target here. I've hit my weekly as well. Is this a good place to keep selling? No. Because it looks like it is now, and I'm sure I would have explained it at the time. It could, oh, come on. In those situations, sometimes, not always, but often, you do have your big retracements. In particular, if this happened early in the month. Then by early, whatever that means to you. The first 3, 4, 5 days, the first 10, but anything before the 15th, these are all your decisions, right? But if you hit your target early, often it reverses. So you might have been thinking reversal here, but down here, maybe sort of this is about the 15th. If it's going to do it, it has to do it now. Okay, so in this situation, you might have waited for at least a breakout, at least a higher high of some sort, and then all that kind of stuff. Maybe moving average crossover. So you might be thinking it here. Moving forward now, if you recall, just 2 or 3 days ago, we were here, and I did the whole discussion about moo trades. If you don't remember, then you should have been there. If you weren't there, you should have been there. And this idea now is you're making a decision if it's going to stay bearish, and by definition it didn't turn bullish here, so there's not much hope left. Okay, so now you sell at resistance. Remember, I identified if you were a bull, you identify 2 levels of support in which you might buy, and if you're a bear, you identify 2 levels of resistance in which you might sell. They're still marked, you see? So going into a smaller time frame, look what our plan was, okay? This is a sell, this is a sell. Do you see any more? Now that it's actually happened, do you see any more? Well, here's your sell, Here's your lower high. Here's your lower low. Here's your lower high roll reversal. Lower low, lower high roll reversal. Right? I'm assuming you know how to price action trade. Right? You make a new lower low. You look left. You drag that across. You sell here. New lower low. Look left. Drag this across. There's your new sell. New lower low, drag this, right? Drag this across. This is your new sell. New lower low, drag that across. Okay, and now it's consolidated and busted up. Now you can take this on the higher time frame and you measure that high to that low to that high. Okay, you look left. Okay, drag that across. So this is your new sell zone. You see? The other way of doing this is just good old Fibonacci. And you would say, I'm interested in the 382. I'm interested in the 50%. Right? I'm interested in the 618. You look left. Are any of these important? You can even see it's over here as well. Okay. And that's your continuation, lower low, right? There's your lower high. And you keep selling until the cows come home. Do you look to buy? No. Remember that? We talked about this just 2 or 3 days ago. In that scenario, there is no bullish trade plan. Okay? That didn't stick with anyone? It was just, I don't know, 2 or 3 days ago. It didn't stick with anybody. Was it yesterday? Well, there you go. 2 or 3 days ago. All right, yesterday, 1 or 2 days ago. Okay. So like here it might reverse. Here it's not that good, but it still could reverse. Over here it ain't going to reverse. You see the big differences? Hassan asks a question about gapping. No, the market doesn't tend to gap much anymore. Back in the day, it gapped a bit, and sometimes I would trade the gaps. But not so the real answer is not really anymore. The market is so mature and so liquid compared to back in the day when I first started trading that generally there isn't a gap to even worry about. Okay, so I wouldn't worry about it, Hassan. Okay. Yeah, oh yeah, my pleasure. There was a time though, Hassan, where, I've been in situations where the market gapped, 300-400 pips over top of me. It doesn't happen like that anymore. Like, put it this way. So maybe you read something about gaps or something. That's fine, but a lot of that is old data. So like when I used to trade non-farm payrolls, the market would move 300 or 400 pips in a minute. Right? And then it would drop, and then it would rise, and then it would drop again, and then it would rise again. Each drop and rise being 100 pips, 200 pips. And we're talking in let's say in a half an hour, we're talking up a couple of hundred pips, down 100 pips, up another couple of hundred pips, down a couple of hundred pips. Like just crazy, right? You'd click the button and you just whoa, pray that you get executed and all this kind of stuff. Now, non-farm payrolls moves, what, 40, 50 pips and then stops? Maybe if it's exciting, there's a counter trend for another 30 pips. But it's not 300 pips instantly, right? Okay. Yeah, those were the days. So I'm just saying, you don't have to worry about such things as much anymore. I wouldn't put it as a real threat. I think your real threat is trading with no plan. You don't have to worry about. I mean, just imagine planning your trades without even looking at a chart. When I first started trading, there wasn't even charts. Can you imagine? There wasn't even charts. So the market is mature and very, very liquid, and it's wonderful, right? Some complain maybe it's not as volatile as it was before, and that as a bad thing. But you know, I guess you'd have to compare Forex to maybe like a Bitcoin type market, where 15 years ago it was wild and crazy, right? Um, but I don't know too many people that are still alive from those days, right? So I kind of like the boring stuff. All right, so that's it. Thank you for asking questions, by the way. All right. So what did we say here? You would either sell it here or here. How did it turn out? Now notice my target. Okay. You see this, guys? It's just our trade plan from yesterday. We had a look left over here, right? We talked about if you're a bear, where's your two sell zones? Well, you'd either sell it here or you'd sell it up there. And your target is here. That's what it did yesterday. West Texas Intermediate, aka oil. American oil, Joe. Do you see that? That's your day trade. That's yesterday's day trade. But notice how it hit our target and stopped. Look at our entry. Gorgeous, right? Okay. What about day trading it today? Well, if you're a swing trader, you know that that's your sell zone. So if you were a bear up here, if you were a bear here, if you were a bear here, you're going to be a bear here, right? What would your trade plan have been today? Right? You're going to like somewhere between in that gray area, you want to get short. Okay? That's your day trade. The sad thing, if I may, is your target's here. But it broke out on you. So I don't know if you're still in it. So the day trading stuff, you have to really decide, how does this fit into your medium term trade plan, right? A day trade to me is a short term trade plan. But what about your weekly pivots, right? Now, if your weekly pivots tell you that your target is lower, like down here, maybe you jam your stop and you let it run. It doesn't always happen that way. Very often it hits your target and stops. But it's more likely to go through your daily than your weekly. And it's that kind of stuff, right? Okay. So you go to, like, we can change this. And let's go to weekly. Okay. What's the trade plan for the week? Okay. On a weekly basis, what does it mean for price to be up here? What does it mean when you see price up here? No, does not mean sell. Possible reversal, says James. I'm better with that one. It's supposed to be where bulls take profit. So when a bull takes profit, are they getting into the market or are they getting out of the market? Yeah, Joe's got it, right? Stop buying is for sure, right? And that they're getting out. Now, you don't know if they will. You don't know if they will, but that's what it means. Okay? It's like a red light. You just assume everyone's going to stop, but you don't actually know what people are going to do. But, you know, these are helpful guides, right? Okay. And look at this. If you're out of the market and then, okay. Okay. So, do you guys remember this? What was my target 3 or 4 or 5 weeks ago? What was my target 4 or 5? I don't even know. Long time target from weeks and weeks ago. So my target was 73 before these pivots were even drawn, right? So it went to 73 and the stupid thing stopped. It didn't actually touch 73, did it? 72.67. Let me try to get that. I try to get that actual number. So within 25 cents accuracy, 72.80-ish. Within 20 cents accuracy, we were predicting like $20 moves. That's okay, right? But what's more interesting, that it went up and basically hit 73 or hit 73 and collapsed? Which one's more interesting to you? The fact that it rejected it, yeah. Which means, I mean, you can get lucky and say 73 and it goes to 75 and you're like, oh, I told you it was going up, right? But isn't it amazing to have talked about that 3, 4, 5 weeks ago and it gets that close and the whole thing just comes tumbling down? Okay. So it means one of two things. I can see the future and I have some special ability that is unique to me. I was born with. I'm like a superhero, and there's nothing you can do to replicate that because you just don't have the magic power from the planet Zoltan, right? Too bad for you. You should have been Zoltanese, right? Or there is something in here in the analysis that is something that can be replicated. It might be as easy as learning the ABCs. It might be complicated, like learning calculus, or somewhere in between. Okay. But it's learnable, right? That's to me the most important message is that I think you can do this. If you think that's random and lucky, then you're going to talk yourself out of it. You're like, that guy's just lucky. That was just random. Okay, cool. Someone else might say, holy crap, we talked about that for weeks in advance. And now we hit that. And we knew we had a discrepancy between the EIA and OPEC, and that there's an OPEC meeting this week, and so on and so forth. And we talked about demand destruction on Monday, right? We talked about reading the EIA reports last week, right? We talked about the OPEC meeting this week, right? And it hit 73 and dropped. Maybe it wasn't random. Maybe it was not random. Okay, cool, right? So what is falling oil going to do for us? It's going to mess this plan up. And isn't this just terrible how we were stuck in this consolidation and now we're stuck in this consolidation? Now, based on what we see, it's probably going to come up and now test this, but we can't get a breakout, right? We're just trading consolidation on multiple time frames. No, Hassan, I don't use trailing stops. I make decisions. So, looking at this, all it tells me is to stop selling, right? If you were a bear, okay, that's your sell zone if you're a bear. If you're a bull here, you'd be a fool, a gullible. If you buy it now, you're gullible. Oh, but look at the giant green candle, guys. Don't be a gullible. Don't fall for that, right? And if you're a bear, you should have sold it off 34. It's not the world's greatest trade. I wouldn't be proud. I wouldn't bring it home to mom and dad. Mom and dad, look, I shorted the pound dollar. And I made money. Son, let's have a talk. But, you know, it's plausible. It's a little late, right? You're supposed to be going on vacay, right? So that's sort of the last that's left. But what a bull is actually thinking about, a bull is thinking about that. And then buying it on the flip side, buying it off this. Okay. Is this going to happen this week? No, probably not. Yeah, FX forecast, you're either a gullible or an nincompoop. That's not my joke, though. That's Bugs Bunny, actually. Yeah, what a gullible. Yeah, that's just Bugs Bunny, man. La 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 la. Guess we'll do it. Let's just take a quick look. La 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 la. Okay. Talking about the low-hanging fruit. I sold it there. I took profit at that X. I could have followed up on this, right? Right? You see how that's tradable? Could have followed up on that. Yeah, didn't want to. Okay. Low-hanging fruit. I sold that, took profit there. I don't remember drawing the this gray zone for you, but it looks like there was an opportunity to resell, and there's an opportunity to resell again. Oops. Okay. Oh, I sold it. Oh, look, I'm short right there. Huh. So smart. Damn you, Wayne. I'm already short. Oh, snap. Forgot. Smarty pants. Yeah, so I shorted a 382. Well, that makes sense. Shorted the roll reversal. That makes sense. Good. And how's our lira doing? Look at that second chance, huh? Beauty. That's interesting, right? You are the 1, 2, 3, 4, 5. Yeah, look at that, huh? Look how it stopped at the M1. You could have bought it back right at the M2. Your target's M4. Beautiful, like redonkulous. That's the conservative trade plan for a bull for the day. Don't know if you're going to get it, but that's pretty ridiculous. A bear, yeah, a bear should have sold earlier. Let me move this over. See, the bears that sold here did their job well. Well played, sir. That wick was beautiful. Failed. So now you're coming up under the R, and that's not the world's greatest place to be selling. It's sort of your last chance, right? That's your Alamo. So that's okay, but it smells like this to me. And then who knows what happens tomorrow? Don't really know. Okay. I can tell you though, if you sold that, I would stay short today and tomorrow. Okay, and the trend is up, so you're risking it, but as long as your stop is jammed at break even, you live with it. Go for it, right? But you took such a crazy risk, you might as well get paid. Okay. Brooke says, I don't expect price to rise above the previous day wick. First of all, I think that's dangerous thinking. If that's true, then there are going to be like all kinds of stops right here. Okay, just imagine them trillions of dollars like this, right? So someone is you know, it's gonna rise up to here, and every single one of these guys wants it to fall. So you know someone else is just gonna come along and jack it up here first. Because they know the stops are there. They're gonna scalp you. They're gonna hunt your stops. Why wouldn't you? And then it would come down because they would take profit or something, right? But I'd be careful. Don't talk yourself into anything like that. I think it's dangerous language, Brooke. And I know you've been around and all this kind of stuff, but I'm just saying that logic is dangerous. It's very dangerous. I'd rather you say, if it rises to the double top, which, right, you're suggesting that you believe the double top holds. So the language I'd prefer you to use is you expect it to go up and double top, right, around this wick, leave room for the pivot points, leave room for the psych levels, all this kind of stuff. Like, why can't it go up to 5.0 first? You're like, I won't go above that wick. Why can't it go to 5.0? Where's 5.0? 5.0 is like right there. What's wrong with that? Why not to have it come up to 5.0 and then down? So I'd rather you, in your language, because you're talking to me, but you're also talking to yourself. So in your language to yourself, just say in this area, if you want to sell this, you would wait for it to roll over and then you take a shot. Okay. Good morning. Is there a way that might be able to? Yeah, so guys, this is YouTube. So I'm broadcasting high resolution. So if your internet connection is slow, if your Wi-Fi is slow, if your video card is slow, it's going to try to adjust. Right? And YouTube is like the second largest search engine in the world. It's pretty well established. The connection should, right? So you need to just adjust your settings. And I can't do it because I can't. Well, I guess you can do it this way, right? It's here, right? Okay, that kind of stuff. So it's, put it this way, we're talking about, you know, one of the most powerful websites on the planet. It's not me, it's you. But it's also easily fixable, so that's great. All right. All right, so anyway, so now you need to make decisions, right? But just don't say to yourself, it can't go up. It's not going to go past this. I think what you'll find is it will pop up and then it'll drop. Nice. Oh, look at that. It hit my line. Look at, there's my short. Cool. All right, so exotics. Oh, there it is. Exotics. Fine. Okay, let's look at, let's do yen. Yeah, I just noticed the workers are vacuuming. That's a good sign. Oops. They're not making messes, they're cleaning up. That's a really good sign. Okay, how about the Kiwi? What's going on? So we talked about this yesterday. Wayne. Hassan says, Wayne, where can I find the OPEC and IEA? There's also the EIA. They have websites on the World Wide Web. So you go to a Google search engine and you type in IEA. You got it, bro. Okay. All right. Looks like our fib held. Okay. Kicking off the moving averages. Maybe we're on our way here. The 55 is in control, and often that tells us that we should be cautiously bearish, that it may not actually make a lower low. It might get hung up on support. So that's plausible. Okay. So you have to decide what you want to do here. If you're a buyer, you are at support, and you're buying a daily 55, right? So you're buying it down here if you're a bull. Your other place to buy would be down here. So you're either buying it at 76-ish, or you're buying it at 75-ish. Yesterday, I saw yesterday, the only things that popped up were news related to OPEC. Yeah. Oh, well, that's because of there's an OPEC meeting, Hassan. We talked about it on Monday. There's an OPEC meeting this week. So there's going to be a lot of news. But you should have known this stuff 2-3 weeks ago. The fact that it's coming out now and it's on TV and it's on your broker's news feed, it's too late. It's already happened. People are already making money. If you're just reading it and you're like, oh my God, look, OPEC, you've already lost. Oh, what's happened? All right, something just bombed out, guys. Something just bombed out.